Welcome everyone to this climate bonds virtual panel discussion. Please bear with us for a second for those who are already online. Thanks for your punctuality. As a German, I appreciate that. Just give the others 1 or 2 more minutes to dial in. Welcome again to the Climate Bonds webinar, a virtual panel discussion. We'll be with you in about a minute, allowing some more people to dial in. Thanks for your patience. Welcome, everyone. Let me now kick off the Climate Bonds webinar, a virtual panel discussion on sovereign green, social and sustainability bonds, a survey we've done on this very ultimate power to transform the market. Here we are, 3 past noon, where I am, close to Amsterdam. Good morning if you're a very early bird in the US. Good evening if you're Asia-based. Hello, and I hope you've had a good lunch if you're in Europe. Well, clearly we are nowhere near fixing the climate crisis. As you know, we always remember you and ourselves of that every time we talk green bonds. I don't have to tell you how bad the climate records were last year. And where I'm sitting right now, here's a window to the right here in my office in the attic. It's just one of those other way too warm winters, raining all the time, very depressing, and it hasn't freezed at all yet this winter. And it was not like that when I was a kid, frankly. I'm not that old. So that tells you how runaway climate change is. However, there is an opportunity here. There is an opportunity to build back better than we did before. There is an opportunity to use this once in a lifetime nasty Corona period to not lock ourselves into the fossil fuel economy that we used to build, but to use this unique post-war recovery to build a greener future. And that makes it very clear that there's a role for government here, a very central role for government. And it is thus very opportune to discuss sovereign or government-related green social sustainability bond issuance. We're going to do that with a fantastic panel. But before I introduce them, I want to thank you, our participants, for the hundreds of registrations that we've had, and I see there's now more than 200 people dialed in. So thank you for being here. Thank you for being with us. I am Manuel Adamini, working as a senior advisor at the Climate Bonds Initiative, and also working independently as a professional speaker on all matters sustainable finance. Let me now introduce the panel to you, and you're seeing everyone online already. Ladies first, we've got Elvira Eurlings with us, the director of the Dutch State Treasury Agency here in my country of residence, the Netherlands. Proud to have you with us, Elvira. Then we've got Alexandre Vincent. And if it hadn't been ladies first, I would have introduced our French man first, because the Agence France Trésor that he represents as the Green Bond Manager is one of the most prominent sovereign issuers in the space, isn't it? And almost the first, almost. Then we've got Zoltán Kurali, the Chief Executive Officer of the Government Debt Agency of Hungary. And we're very, very pleased that Hungary is helping push this sovereign issuance agenda into Eastern Europe. And we've got Jonathan Drew, Managing Director for ESG Solutions at Global Banking at HSBC. Last but not least, I should mention Caroline Harrison, and Leah Meeting. Leah, don't be too shy, turn on your video. Our researchers at the Climate Bonds Initiative who have co-authored the very survey that we're talking about today. And clearly you may all have read it, at least we hope, but they will present it in a minute. And last, we should thank our webinar hub, our communications colleagues, and specifically Lena and Louisa in supporting us here. Now, please do raise your questions, dear audience. You can do so via the Q&A function. We'll monitor. Some questions may be answered in writing. Others will be forwarded to me as your moderator, and I will do my best to pick them up as we go along. I can't promise we will pick them up all, but we'll do our best. We'll probably now discuss in a minute, why do sovereigns issue green bonds? How do they do that? What are the lessons learned, and what can we expect going forward? But before we do that, let Caroline quickly take us through the paper, this survey that we've recently done, so we're all on the same page, and then we're going to move right into the discussion. Caroline, the screen is yours.
Thanks, Manuel, and thanks to everyone who's joined today. So I'm Caroline Harrison. I am a research analyst at the Climate Bonds Initiative, and I am the co-author, together with Leah Muting, of the research paper that we are going to talk about today. Our mission at Climate Bonds is to mobilise the debt capital markets for climate change solutions. We had a big virtual party in November 2020 when the cumulative total of green bonds reached $1 trillion. But for scale, the sovereign bond market is around 45 times greater than that at $45 trillion, including bonds that have got more than a year outstanding. So sovereign issuers have the ultimate power to scale up this market due to their size, but also their responsibilities of budget management and resource allocation and their high profile position of influence. So we want to do everything that we can to support governments to direct expenditures towards green and social projects by shining a spotlight on the issuance to date. And that is why we decided to do this survey. So we started this project in late September. And at that point, 22 sovereign issuers had printed green, social and/or sustainability bonds with a combined value of $96 billion. We invited all of them to talk to us, and 19 of them did. So at the time of the publication, the results of the survey pertained to issuers who'd collectively printed $93 billion of GSS debt. So we had 8 developed markets and 11 emerging markets participating in the project. So that's the background to the project. But what did the project tell us? What were the outcomes of this project? So you won't be surprised to hear that sovereign GSS bonds have market changing potential. And that message was reiterated throughout our survey. So broadly speaking, sovereign GSS bonds can help to galvanise activity in local markets by providing access to a large and liquid investment. This is important because it allows investors to move down the credit curve and create space in turn for other types of issuers to come to the market with GSS bonds, so potentially lower rated credit issuers, for example. Large demonstration bonds can also help to get the local infrastructure going, establish best practice and set precedents in transparency and disclosure. So this can encourage dedicated green, social and sustainability investment mandates, which gives demand in turn to, gives rise to demand for more issuance. And so it creates the sort of the circle. Sovereign GSS can contribute to a larger strategic vision, such as meeting NDCs or embedding the UN SDGs into government policy. The pricing benefits, well, there may not be a reason to issue, but where they are present, we expect that debt management offices will, as a result, encourage governments to find other suitable expenditures to help create a pipeline for further GSS issuance. So again, gets the cycle going. Respondents told us that sovereign GSS bonds lead to enhanced cross-border collaboration that can take multiple forms, from sharing information with counterparts in other countries or speaking at international events and sharing experiences. So again, this is getting the chat and the momentum going for the market. The process of issuing a sovereign GSS bond did occasionally present challenges, and our survey respondents did acknowledge that, but most of the challenges have tested solutions, and respondents to the survey repeatedly said that the benefits more than compensated for the challenges. So we asked, as part of the survey, the respondents to offer some words of wisdom for prospective issuers of sovereign GSS bonds. This is what they came up with. Our panel members can elaborate more on these suggestions, but broadly speaking, the key messages here are clarity, transparency, and open communication at all stages of the process. The greenium is a topic that everybody wants to know about, particularly in emerging markets. Of course, we had to include, well, it would have been remiss of me not to include some pricing analysis in this paper, because that's what I spend most of my time looking at. So, of course, I had to add something. Availability of data and points of comparison remains an issue, of course, as always, but we did build yield curves for 23 out of 32 bonds that had been issued by our respondents, and only 4 of those exhibited a normal new issue premium. So 10 of them priced on their yield curves and 9 priced inside their yield curves, in other words, exhibited a clear greenium. We also did another exercise whereby we looked at the average demand for the prior 3 bonds from each issuer, and we compared the subscription or the demand of those bonds with the green bond, and in most cases the green, social or sustainability bond attracted higher book cover, and that's what this chart shows here. On the topic of distribution of the bonds, an average of 44% of the green bonds in our sample were allocated to dedicated green investors. And I'm pleased that we've got Elvira on this call, because she will hopefully be able to elaborate a little bit more on the pioneering model that the Dutch Treasury introduced, in which investors were encouraged to demonstrate their green credentials to receive preferential allocations. So finally, I just want to draw your attention to some numbers, which I think sort of help to demonstrate the scale of the potential for sovereign issuers in this space. The OECD suggests that an annual required investment in green infrastructure is $6.3 trillion. Remembering here that the cumulative green bond issuance since the beginning of the market has just recently topped $1 trillion. So the International Energy Agency points to a spending need of $13.5 trillion by 2030, and that is only for renewable energy and energy efficiency alone. So where is this money going to come from? Well, come on, sovereign issuers, you know, you've got $45 trillion worth of bonds outstanding. So let's start being serious about greening the expenditures that are related to those bonds. And please, you know, start to evaluate all of your expenditures through a GSS lens. So Alexandra will hopefully be able to elaborate on what France is doing in this space. They are really blazing a trail by looking at all of their expenditures in this way. And we hope that others will follow the leadership example of France. So at the end of last year, we'd got up to $96 billion of sovereign GSS bonds, and that's just, you know, great. That's a brilliant start. 14 more issuers have committed to come to the market, also very good, and we look forward to that. And that leaves, according to Bloomberg, 122 issuers, including some of the biggest ones like the US, China, and Japan, who have yet to state their intentions here. So come on, you know, let's get going with this, please. So again, you know, if you want more detail, please read the paper. It's not very long. I think it's only 24 pages. And if you're intimidated by that, don't worry, because at least half of it is charts. But please, read the paper. There's lots of information in there. And with that, I will hand over to my colleague Manuel for the panel discussion. Thanks for listening.
Thanks a lot, Caroline. And indeed, I can only concur. Do read the paper. I reread it this morning, and it's indeed full of graphs, and it's a fantastic read. It's a good summary. There's an awful lot to unpack here. Thank you, Caroline, for presenting. Thanks, Caroline and Leah, for conducting this research in the first place. It's a great piece of work. Well, a lot to unpack. I think the prime thing here that we may want to start with is the motivation to issue. And frankly, when I read the paper in the very first place a couple of weeks or months ago, I was surprised to know that apparently pricing is not the prime motivator. So let me just test how that works with all of you. Sorry, but again, my home bias plus ladies first. I want to start with Elvira. You weren't first in the space, but you came in with a bang the other day, 6 billion. What was your motivation to do it?
Thank you, Manuel. I'm pleased to be here. Thank you for inviting me to this live stream. I think when you talk about motivation, I think I first would like to start with sketching two relevant developments that we saw a few years back that really created the momentum. We had a new government coming in office in 2017, beginning of 2018, who historically drew up a very green government agreement, green plans. They came up with some relevant legislation to translate the Paris goals into very clear targets for the Dutch government to reach. So the new government coming in office beginning of 2018 was very clear about its green ambitions. So I think that was a relevant context to even consider issuing green bonds. I think another relevant development was that the Dutch government had been very vocal, for example, towards the financial sector, that the government felt that the financial sector should step up, should green up its portfolios, should report on its footprint, should report on the impact of its investments. So they were calling upon the financial sector to really play its part. So I think at one point it felt like it was only fair that you also practice what you preach, that you should also review your own processes, and that the funding side could probably also play its part. So I think that all escaped the momentum that for us as a DMO, we felt very comfortable exploring also this space. And we conducted a feasibility study. We went reviewing, as the French did before, reviewing the budgets of the ministries, what kind of investments were there. And we set the bar high. As you said, we were not the first one. So we had to see what kind of unique feature we could pick. And we said it should be a very dark green bond. So let's
go there in a second. So let me stop you there, if I may, Elvira. Okay. Let's go to the details of how you did it in a sec. But first, the motivations. Let me test that with Alexander. Indeed, France was first and definitely in announcing the ambition to issue a green bond. Then Poland cornered you, which was fun to observe, frankly. Maybe you didn't find it that funny in Paris, but living up to practicing what you preach. I mean, the Paris Agreement had just been made, right, under the tremendous diplomatic leadership of France, which was outstanding. Was that the key motivator, or was there something else, Alexander?
Yes, very much so. Very parallel to what happened in the Netherlands. The initial impetus was clearly of a political nature. And the fact that we issued about 1 year after the Paris Agreement was really a signal, a political signal from part of our government that France wanted to stick to its climate objectives, and was absolutely committed to act as they would, and support green finance as a tool to reach carbon neutrality and to match our environmental objectives. And to be absolutely frank, the French Debt Management Office, of which I'm the representative today, was initially a little bit reluctant to going into the issuance of a green bond for a series of technical reasons, from part legal, but also financial. It seemed that there would be a series of challenges that would be difficult to match. And in total, well, the operation was a success, included on the technical side. But in a way, you mentioned that Poland had done it first, but with a benchmark size and fairly long maturity, we are the first ones to do it. So it was there was an uncertainty about how it would make market expectations.
And it's now so massive, isn't it? I mean, it's now 27 or so billion outstanding. I mean, it's huge, tapped and tapped and tapped over again. Now, the situation was different with Hungary, probably. I mean, arguably, when France came to market, we first had to see, you know, after Poland, fine, then France, will this really work? Will it really take off? We didn't know. I think Elvira, the Dutch really helped in changing the tide for good and saying, okay, there's another huge, high-rated, massive issuer in the space. It's all going to be okay. And then the context with you, Zoltan, was again different, wasn't it? When you guys came to market, the countries and companies as well were all tripling over themselves in announcing net zero ambitions for 2050, a different context. How did that fit with you issuing?
Yeah, so I think in our case, there are similarities and there are some differences to the Netherlands and France. I mean, obviously, we are much later to this party, so to say, and that has economic reasons, because the financial crisis was a little longer lasting in Hungary, in particular, because of this massive foreign currency-denominated retail debt that had to be cleared out of the market by 2014, early 2015, and then there was a very solid economic recovery up until obviously COVID hit. And I think the public opinion has only started to really focus on this, on the environmental issues, because, you know, people were preoccupied getting out of a crisis, then getting on track with the recovery, you know, up until probably 2018, 2019. So the public opinion kind of crystallized in 2019. So it was very obvious for political decision makers that this is something that requires some focus. So the government came up with an environmental protection action plan, which was announced in February 2020. And we basically, in conjunction with that, sort of realized the opportunity to kind of come up with an aligned debt financing sort of strategy, capturing the ESG investor universe. And essentially, initially, we thought we would issue only in Asia, because we were not 100% sure about the level of net green expenditures in the budget. And kind of this developed, we got positively surprised. Then we actually entered the euro market in June, and at the same time, the government legislated the 2050 climate neutrality goal. So for us, it happened a lot slower initially, the realization, but then the execution was like December 2019, June, sort of 2020. So it was very fast, and obviously we went a little bit against the tide because of COVID. So we kind of, you know, we were sticking to our guns and the plan and executed on time and on plan.
Very good. And just for the context for the audience, indeed, Hungary issued a Japanese yen denominated transaction first, a pretty specific deal for your main trading partner, isn't it? Talking of Asia, let's now turn to, well, not to Japan, but into the right direction. Hong Kong, that means to Jonathan and HSBC. I mean, you've seen many an issuer, you've handheld many an issuer through the process. I think very recently, Hong Kong with a $2.5 billion deal, wasn't it? Jonathan, how does all of what you've just heard from these three country representatives resonate with the motivations for issuance that you have seen?
Well, it's fascinating, Manuel, just to hear the sort of diverse and very bespoke reasons, in a sense, as to why individual sovereigns chose to issue and how they issued and what they focused on. And that's really what we've seen in Asia as well. So very, very different reasons. If we look at Indonesia, for example, first emerging market to submit its NDCs at the Paris Agreement. They worked with United Nations Development Programme to tag their entire budget to expenditures aligned to meeting their climate targets. In their NDCs, if you remember, they had two pathways. And they said, you know, we'll have a more aggressive pathway if we get financial support. So in that sense, it was entirely natural then to build off the back of that. And they did it, interestingly, through their Sharia Islamic funding program, the Green Sukuk program. So that was really the sort of the thinking there, aligned to the expenditure to meet you know, the projects that were going to help them deliver against their targets. Compare that to somewhere like Hong Kong, which of course geographically has a tiny footprint. Most of Hong Kong's emissions are sort of probably in that area that are excluded because it's international. It was pre-COVID, international air travel, international shipping, 44 million tons, it's a tiddler. For Hong Kong, it was really about green finance markets. Hong Kong, a huge regional finance center, very fast growing green finance markets globally. So clearly a recognition, we want to maintain our status, we want to grow our status, we need to be in green finance. So it was encouraging the sort of the corporate leaders to issue, and to some of the comments that Caroline made, clearly the sovereign then showing leadership. And obviously with the latest deal, so they did their first deal in 2019, and now with the one earlier this week have now set the benchmark right across the curve. So a completely different set of reasons. South Korea, again, a completely different set of reasons, very much focused on social and sustainability. And many of their programs focused on supporting that sort of what perhaps some of their societies and communities who'd been left out of the economic miracle of the last 30, 40 years, social issuance. Although in their case, actually interesting, proceeds are applied through the Sovereign Wealth Fund external to Korea. So totally different rationales amongst those three, just as examples, but all very related to government policy and sovereign objectives.
But now, with those motivations, I mean, clearly people want to understand issuance motivations because that lends credibility, isn't it? And you've mentioned this point of the sovereign coming to market, or the government in this case, and you know, that is opening up, that is setting the example. And congratulations. I mean, you've done the PR well. I've noted that this point has been picked up pretty well by the media, that Hong Kong wants to position itself as a sustainable marketplace. So that seems to be working well. But with leadership, credibility is so much key. So I want to pick up a question that we're seeing from the audience, which is about investor pushback and credibility. And get warmed up. I will ask a few nasty questions now. I mean, credibility. We can criticize everyone. Let's start with, or let's stick with you for a sec, Jonathan, and then I want to turn to everyone. Let's take Indonesia, have issued. If there's a huge country that is burning an awful lot of thermal coal and chopping down tropical forests, then it's Indonesia. And yes, they do have great ambitions for climate, but how credible is that? And what has investor criticism been on those points?
Yeah, well, look, it's a fair question. I think, and when you do look at Indonesia, it's got huge challenges because it's got an economy that is significantly supported by hydrocarbons, but it's also got a very large population, and they're sort of lower middle income, just crawling out of the lower income brackets. So they've got huge challenges in transition. They've got energy subsidies embedded in their economic system. So that makes all of that transition very, very challenging. They do, as you implied in your question, they've got a disproportionate share of, precious natural resources that they have to, that they're seeking to look after. But at the same time, there's a huge financial incentive for those less well-off communities to make the short-term profits by destroying some of those. So it is a very tough mix to deal with. And if all that wasn't enough, they also sit as a massive victim of climate change, because they're right in the pathway of the worst impacts of the El Nino storm systems. So they get the super dry periods and the super wet periods.
What are investors saying, Jonathan? Do they buy the story, yes or no?
Yeah, the feedback was very, very good, because I think, to my earlier comment, Indonesia went out there. They were the first to put NDCs forward. They were very clear in how they were trying to address these challenges. They clearly recognize the value in green, because if you go and talk to their planning department, they're perhaps, and I'd be interested in comments of other representatives of other sovereigns, but they've published their long-dated economic outlooks, and they've mapped those to different carbon pathways, and their high carbon pathway, business as usual, is their low growth scenario, and their low carbon scenario is their higher growth scenario. So this is what they're planning for. That's not to dismiss the challenges. And I think that the markets have said, okay, we understand that. And investors have wanted to support that. And they went in Sukuk format. And I think not only were they very successful in tapping into a sort of an existing pool of Sukuk investors, and not everybody does, but they also, because of the green program, got a whole number of investors who haven't historically looked very closely at Sukuk to look at Sukuk. So I think very, very positive. It's, clearly the challenges are there, but a very positive response overall.
Sounds like, there is a strategy, there is a build back better strategy here. Let's now turn to, let's turn to Elvira. I mean, Netherlands, I'm afraid I come out of a very wooden German area. There's no forest here to chop down in the Netherlands. I miss the trees every day. There's no hills either. The dikes are world renowned, but we've got other problems here, isn't it? Our dikes are great, but there's so much more climate adaptation to be done. Netherlands is pretty well behind the curve in meeting its own climate objectives, pretty well behind the curve in putting down the renewables generation capacity that we need to have. I mean, investors must have slapped that into your face, wasn't it, Elvira?
Well, not on our first roadshow. I think maybe we were a bit fortunate on the timing, which was still some years back. But you're right, we should not be complacent. And obviously we face different challenges than the ones that were just described. But what we did is we put some very ambitious goals into our own legislation. So we said the Netherlands should be able to have a 49% reduction in CO2 by 2030 compared to 1990. And we're not there yet. And we have some intermediate milestones. And we have studies coming out just in the beginning of the year that show that we should step up. If we keep the same pace, then we will not be reaching those goals. So we got a clear signal that we need to step up, cannot be complacent. Sort of unfortunately, we are in an intermediate period now that we have elections coming up in March. So we are eagerly awaiting a new government to come in. And we hope and we expect them to come up with some also painful measures that will help us meet these goals, because we need all sectors to play their part. We should have much more renewable energy sources being put to our mix. We should also have much more energy efficient investments into the housing environment. We should step up our investments in the climate adaptation area, water management, strengthening our dikes. So there's absolutely more investments to be made that will be perfectly suitable for launching a new green bond by the DMO. But you're right, we cannot be complacent and we need to step up our efforts as well. And the investors, I think they still support the story, because I think same for Indonesia, there is a clear commitment to transition, to step up. But obviously that should also come with results. So if we can again show that the government is serious about stepping up, costs money, that's a political decision. But I'm sure that the investors will see that the efforts and the commitment is there, maybe in a less speedy way than we envisaged, but we're still making the steps in the right direction.
So it sounds like at least we're acknowledging the problems, we're frank about it, which is one step better than it used to be. However, so we will have to see that, action follows pledges, as concrete and medium term or short term as they may be. Zoltan, let me turn to you. I mean, same question in your direction. The papers had been full of some Eastern European countries blocking recent negotiations around the EU Recovery Fund and all the climate measures that are attached to that. And Hungary was part of that journey. I've also heard investors say, well, there are some concerns around freedom of press and other freedoms on the part of the government. So governance concerns, the G of ESG. How did the talks go in your case, and what sense did you get from investors regarding your country's credibility on climate?
Sure. I think there were two types of pushbacks. One was actually less so governance related, but much more like, are we ambitious enough? With respect to because by the time we roadshow the first day was a 1.5 billion 15-year euro benchmark, and the second was the Japanese yen in September. So when we roadshowed the euro deal, this whole legislative process with the 2050 climate goal was ongoing. So it was obviously in the parliament and everything. And I think the question was, why not fast? I mean, we are not really a massive polluter, so why can't we reach this earlier? And I think the argument that we tried to get across, and I think we managed to, was that we are kind of like catching up to, you know, sort of the West. I mean, if we are thinking about, you know, sort of European Union context, actually GDP per capita is catching up, and we expect to have higher growth in the years to come. And as long as the foundations of the economy are still kind of carbon-based in a way, obviously there's a lot to do to change that, and a lot of you know, a lot of great efforts to come to fruition. Inevitably, we are going to pollute relatively more than countries with lower growth path. But I think what we kind of presented is that in our case, you know, this, you know, the Environmental Protection Action Plan was focused on which sectors are the biggest polluters. Obviously, the biggest polluter in our country, obviously industry, but transport. But, you know, you can't clean transport without cleaner energy generation. So therefore, what we explained is that we will actually close down the last remaining coal-based power plant as a first step. We will massively increase our solar capacities. Obviously, wind is not something that we think we are best suited for. And then essentially that will bring us to a much cleaner sort of energy. Obviously, we can't get rid of gas because we need base load. And then obviously we are investing into the upgrade of the nuclear power plant. And, you know, then energy production will be much, much cleaner. And on the back of that, you know, obviously the changes in transport can come to fruition. I mean, obviously we have a very interesting support scheme for electric and hybrid cars, sort of tax credits, registration tax credits, and even direct government subsidies to people who purchase those.
Let me pick up a point on use of proceeds that you've moved to, Zoltan, and thank you for that. I don't want to get carried away on the motivation. Thank you all for being frank on the credibility. It seems like in your case, again, you're being frank on, hey, we'll focus on the most polluting parts first. These are there, that's a fact. And maybe focus on those rather than on what is already so green. Sorry, Alexander, I will have to let you off the hook easily because I can't figure out a massive criticism for France that quickly. If you figure out one, just tell me. But I want to move on that note. I want to move to Elvira, and I'll be going back to France quickly. But Elvira, you're taking a very different stance. So where Zoltan says, let's focus on what is most polluting in the first place, that's where the biggest carbon bang for the buck may well to be had. Netherlands has taken a very different stance. You wanted dark green projects only. How come?
Yeah, well, it was our first green bond, as you know. So we wanted to be very clear that the story was not in any way vulnerable, that it was clearly a very highly sustainable and climate-focused green bond. So we wanted to make sure to also keep it simple, so not to include too many items in the green bond, but only include those that would inevitably contribute very significant to these Paris goals. So we selected 4 categories of investments. So we said renewable energy should obviously be included in the proceeds. Energy efficiency may be very small in size, but very close to the hearts and minds of the people, because it includes subsidies to insulate your house, to provide the rental corporations to upbeef the housing stock. We included green transportation because it's a massive use of transportation within the Netherlands. So the passenger transport, biking places, and we included very Dutch element, climate adaptation. So all investments that we do to protect our country from flooding. So we wanted to be very clear that those items would inevitably contribute to these climate targets, that they would also be relatively simple to report on, and to make it very clear that those were the investments that we would allocate our green bonds proceeds to.
So it sounds like a very clear story, and I will say indeed it does resonate not only with ESG specialized investors and professionals, right, but with the general public. Everyone uses a train. It's the most the fullest train network in the world, I believe. and all those things you've mentioned resonates with the general public. A few categories, a few massive projects. The train project is massive in the use of proceeds and the subsidies. Alexandre, in France, it was very different. It was much more of a mixed bag, many smaller projects as well, arguably a little bit less tangible than those Dutch trains. Why did you opt for that approach, and how was it perceived?
Yes, indeed, you're very much right in mentioning that we resorted to a whole series of very various and somehow heterogeneous eligible expenditure to be matched by our green bond issuance program. This was mostly due to the fact that we wanted to reach a sufficient amount of eligible expenditure in order to provide the green bond with sufficient liquidity. And in order to do so, I must admit that we really had to go through all the budgetary lines. All ministers were involved in order to identify which of their policy programs would have the environmental content that would make them eligible. And we, in the end, we had about 40 lines. So, and some of them are rather small in terms of amount, but are quite significant in terms of dark green expenditure. So you understand that we really based the whole process on our budgetary documents, which indeed was quite useful then to perform our allocation reporting. But yeah, the most important job was to identify the eligible expenditure. This is because, of course, we have to cap our green bond issuance program by the amount of eligible expenditure, which is identified ex ante. This is a binding constraint on our issuance policy. And as this also may explain, together with the need to provide the market with sufficiently liquid assets, the choice we've made so far to focus just on one bond, which is maturing actually in 2039. And we are very happy to announce that there will be a second bond to be issued in 2021, because the first one is large enough, and we have reached now a larger amount of eligible expenditure, and we'll be in a position so to have 2 points on our curve. That's not a green curve. It's not our ambition, but we want to provide the market with several assets.
That's good. You've just answered a question which we had of the audience, which is, does France have the intent to build a green yield curve? And I think I've just heard you cautiously say yes to that. You've built and built and built this one tenor, and now you'll bring us the second this year. So here, thank you for that announcement. If people didn't know yet, that's really great. I should add to your explanation, you've made your lives more difficult even by not bringing in massive unique projects like your railways. I think you French had made a point at the time saying those parties that can issue themselves, like the French railways, should do so, and the state shouldn't cannibalize into that. So arguably you've made it more difficult for yourselves than you could have. Elvira, you wanted to come in there.
Thank you. I was just wondering, we refrained from putting, also because it was our first one, we want to do it well, we want to do it in an undisputable manner. So we refrained a bit from including the more intangible items, like you could maybe argue research and development. Also because we got a very clear demand from our investors that they want to have clear indicators, as they would also translate those indicators that we will report on into their own annual reports to their investors. So that's why we refrained a bit from research and development, for example, as an item to include. So I was wondering to my colleague in France how they have tackled this, whether it has worked for them as well. And maybe we were also maybe a bit concerned within a country that we would maybe not spend the money if the pressure would be on, to be very fair. curious to hear your views.
Alexander, that was to you.
Yes, indeed. Thank you. Regarding the less tangible assets, and in particular the fact that fundamental research in the field of environmental science is a significant part of our eligible expenditure. This was the fair result of the process which I mentioned previously, that we wanted to identify our public contribution to climate change adaptation and mitigation. And our understanding was that fundamental research is fundamental with regard to how we can adapt and mitigate, and how we can manage climate challenges, but also in the field of biodiversity and pollution. And this is really an interesting, an important part of our eligible expenditure. And I must say that investors did not really challenge us on the relevance of this, but the fact is that we committed to having this environmental impact evaluation of our eligible expenditure, which is quite a difficult task when it comes to fundamental research. So in part for this reason, we established a separate institution, a Green Bond Evaluation Council, which is devoted to establishing environmental impact reports related to our eligible expenditure. And this institution is now, well, first they tackled some other eligible expenditure which had significantly large amounts, but now they are trying to assess to what extent the public subsidies to satellites, for instance, will materialize into a positive contribution in the field of environment. We are in the process of establishing this report, but I think that through this process we tend to expand in a way the field of what kind of expenditure are eligible to be managed in the sphere of green finance. And this was an important, interesting part of.
Let's stick with that for a second. So I want to leave the impact reporting, but go one step back where you mentioned earlier about finding those eligible projects and assets, earmarking those projects, particularly when they're smaller. We've heard from Elvira there are bigger ones, but how do you find those across your departments? Caroline has alluded to the fact that France has a particularly interesting approach there in tagging potentially eligible expenditures across various departments and giving them a shade of green, if you so will. We also have a question from the audience about that. How far do you assess the degree of compliance with the draft EU taxonomy? But before I turn to that, maybe Zoltan, you can enlighten us a little bit about exactly those challenges that you came across about, how does finding of eligible projects and assets relate to existing budgeting and reporting processes? And then maybe we can learn a lesson from France.
Yeah, absolutely. And I think probably an anecdote first. When we selected our advisor in early February 2020, they, this was still pre-COVID, so they were allowed to travel to Budapest. So we actually gathered together a working group and steering committee and had a kickoff meeting. And we then took them out for a walk, and then we kind of made a bet as to, okay, so what do everyone believe the eligible net green expenditures are going to be, and how big of a green bond can we print? I think the largest number that we received, actually that has come from the advisors. So we also took part, as insiders, we took part in this whole bet. And I think the largest number was something like, €1 billion type of number. Obviously, with the market standard of lookbacks and looking forward, we actually came up with close to 4, actually a little bit more than 4 billion. So this is how much, like a couple of days into the process, we underestimated the potential, eligible green expenditures. And that is a challenge, and that is a challenge stemming from the fact that the reporting standards are not too helpful. So they are not too helpful in IFRS. They are not too helpful in ESA, the way the government needs to report, because it's very hard, to be intuitive about like what are the real net green expenditures. Then we did this massive amount of work with the working group, consolidating views from various ministries, eliminating double counts and all the rest of it, and we arrived to a much, much higher expenditure. And I think that is something which we are now fine-tuning with the first allocation report that we are going to publish relatively in Q1 2021, and making it even sort of more, sort of less ambiguous with respect to, okay, are there any fossil fuel related operating costs, for example, in relation to the public transport area and stuff like that. So make it a bit more, sort of ring fenced in a way, and as such, sort of make it darker green.
You're still fine tuning, also giving those shades of green. I implicitly hear.
Yeah. So the reason why we went with Cicero was exactly that the shades of green, because we wanted to learn from this process, and we wanted to be sort of given feedback that is more precise than just yes or no. So we basically, obviously in any case, when you build up your potential expenditure pool, that gives you, a indication how much you can potentially do. But when you do the actual allocation, which we have already done, then you can basically separate in a lot more precise manner, and sort of intentionally leave out things that are maybe controversial, maybe kind of like untraceable. Or in some cases,
let me turn to Alexander to see how they've implemented this green tagging. Just make it short and sweet.
Very well. In the first approach, we had a rather empiric process of trying to see experts say which budget expenditure would have the dark green content that was expected. But now the process is perfectioning itself through time. And this year, for the first time, and I think that France was the first country to perform this, together with the parliament voting the budget law, it established a green budgeting document through which each and every budget line is being affected coefficient of greenness, which at times can be negative, by the way. Of course, it's not just self-promotion, it's a thorough and honest assessment. Well, this was a separate exercise from the one which had been previously done in order to build the green bond framework. But it happened so, of course, that the results were far convergent. And in a way, I can mention that this green budgeting exercise helped us identify some dark green expenditure that had not previously been identified in this empirical approach I just described. And in a way, it's the same with the EU taxonomy. It's providing us now with clear criteria in order to select dark green expenditure. Here, the challenge is huge because it requires strong data availability, also because the taxonomy is not complete at this stage, but we're also in the process of benchmarking our selection of expenditure against this new standard, and possibly converging towards a very selective dark green pool of eligible expenditure.
So I hear a couple of things. One is a negative coefficient maybe there for greenness, which would probably resonate with you're doing significant harm somewhere, you're doing harm, so you capture that already. And I also hear that you are looking into aligning this coefficient with the meaning of the different hurdle rates in the taxonomy. A certain shade of green may not be good enough, maybe green, but not good enough for taxonomy, and a certain shade may be green. What I also heard is that there may be more eligible expenditures than you initially thought. Zoltan also made that point. I see you nod there. And Elvira, I think you alluded to that a couple of minutes ago as well. And I think in that same comment, you did say there may be enough volume for even another green bond in 2021. Did I hear that right? We need rumor on this panel.
Oh, rumors. Oh, I love rumors. Well, as I said, we're a bit in a transition year, unfortunately, because we have a new cabinet coming in, we don't know, somewhere around the summer. So as we all know, a new green bond would also really require a political confirmation. But what we were very happy to, because we knew this already in advance, of course, last year. So we said we're going to tap the existing green bond for the last time this year, but we make it a very significant tap. So we will tap more than what we would normally do with a bond of this particular size and maturity. So we have found another 2.5 billion in the budgets to enable a very large final tap of the green bond this year. And we hope with the new government coming in that we can quickly start working on a new green bond framework, because we hope we haven't done this only for one time.
That sounds like a great announcement on this webinar, isn't it? 1.5 announcements that was, or 2, one of which conditional on politics. We understand, that's fair enough. I'm conscious of time. One last quick question to Jonathan, who sees many issues. I know Asia is your region, but I will ask you your question. I mean, what's the point of all of this? If we see the European Commission issue green bonds massively, those 225 billion over the next couple of years, is there still so much of a point of more sovereigns coming to market anyway, Jonathan? Do we need it?
Oh, I think we absolutely need it. I mean, that brings us nicely back to some of Caroline's opening comments. I mean, we need sovereigns to lead the way. The sovereign issuance may only be, Caroline can confirm or deny the numbers, I think 7% in 2019, nudged up to about 7.5% of total issuance in 2020, but it's so much more than that. It's driving the markets, it's setting the benchmarks. The governments are funding often the sort of core green infrastructure, and it's that core green infrastructure on which other green assets can be built, and that's creating green jobs. The sovereign programs are bringing to light not just what the government is spending using its balance sheet for, but also, and a lot of questions will come up from investors around what's the broader policy that the government is adopting that's driving sustainable investment in other sectors, and of course linking that through to then obviously the net zero targets that so many economies are now making. So I think it's absolutely crucial, Anna.
There's still an awful lot of headroom. How could you say otherwise as a banker, isn't it? Caroline, just one quick point, we got to wrap up.
Yeah, I just want to highlight the fact that the EU as an issuer is classified as a supranational, not a sovereign, right? And this is critical from an investor perspective, because if an investor is benchmarked to a broad market index, they still have to satisfy their commitment to the sovereign portion of that index, irrespective of whether the EU issues, that will be classified as supranational. So that is why it is critical for the individual member states of the EU to continue to issue, as well, obviously, as all the points that Jonathan has just made. But, from an investor perspective, it's absolutely crucial to get the market going and offer, this large liquid benchmark asset in the sovereign space.
Thank you for making this very important clarification. I think we will need to hear that clarification much more often in the future, because I'm sometimes concerned of the European Commission issues. Some states may say, hey, that's cool, Europe has done its job and we can just lean back. Let's see, that won't happen. We will keep remembering and banging the drum for more money to flow into climate solutions. We got to wrap up, 1 minute to go. So I ask each panelist to give us their parting thought, please. I always do that, you know that. What is your one thought that you would love the audience to remember from you today? The one thing that you think has really been crucial of what you've been saying today. Make it 30 seconds maximum. We'll start on my upper left screen. Zoltan, please.
I think the message from us is that we will carry on with this mission, and we are actually going to come to market with a Hungarian forint denominated 30-year green bond in second quarter. And that, we believe, is going to hugely contribute to the development of the domestic market.
Fantastic. Yet another announcement. Thank you so much for Zoltan. Alexandra, your quick statement.
Yes, thank you so much. My piece of advice or concluding remark would be that we did not discuss the financial benefits of issuing a green bond in our chat, but there is one indeed, and at least in the case of France, we have a green yen appearing. we are not sure that this will last, and in particular, when the EU Commission starts issuing, this may somehow result in some shift on how the market is going. But this is probably not the main benefit of having a green bond. And I would say that the feedback in terms of public policy management, in particular due to the requirements of having these impact reports, which I mentioned, this is the true additionality, perhaps, for us as a sovereign issuer of having a green bond.
Thank you. So that was on additionality, other, over and beyond pricing. If you want to know more about that, it's all in the report. Have a look at it. Pricing isn't as important as it is often said. Elvira.
Yeah, I fully agree with previous speakers. Let me just share one quick point of feedback that we received during our roadshows. We heard from investors that they told us that only when the sovereigns became active in the green bond space, then they started mobilizing funds for their green impact funds. So that was such an evidence that we would sort of hypothetically state beforehand, but we really got this back from investors, that sovereigns do catalyze more money for climate-related investments. So let that be an inspiration for other governments that still consider the issuance of green bonds.
So investors can't go in big time into climate unless they can also allocate to SSA, evidently. Well, that's a key point. Thank you. Keep mentioning that, Elvira, and specifically coming out of your mouth, this lends an awful lot of credibility to what we're doing. Jonathan, your parting thought.
More sovereigns raising sovereign green, like the three fantastic countries represented here. And when they do it, going out and setting out clearly what is their long-dated transition pathway, because by doing that, that's how they'll guide and direct private sector investment to where it's needed. And we can get on top of this horrendous problem that we face.
Thank you. And last but not least, Caroline?
Yeah, so we urgently need to build a completely sustainable global economy, right? And governments, please take the lead here. You have the ultimate power to accelerate the transition, and GSS bonds can obviously help to meet that funding need. I just want to end with a small housekeeping note, which is that I have really enjoyed this discussion, and thank you to all the panelists. We will be repeating this exercise on the 28th of February, and this time the panel will consist of some of the Asian issuers that were included in the survey. So far we have Hong Kong and Indonesia confirmed for that panel. So it will be same but different discussion.
End of February, so monitor our website. You will find new announcements for new blogs. Thank you, Caroline, for new webinars. Sorry, this webinar is also being recorded. So if you had to drop off earlier or you want to re-listen or share with colleagues, friends, and family, then you can find it all on our website in a couple of days. So thank you very much for dialing in. I see we've had a very stable participation, which is a compliment to the panelists, evidently. We had Elvira Erdings, the director of the Dutch State Treasury Agency, DSTA in the Netherlands. Thank you, Elvira. We had Jonathan Kurali, the CEO of the Government Debt Management Agency of Hungary. Thank you, Zoltan. We had Jonathan Drew, MD for ESG Solutions at HSBC's Global Banking Division. And then Alexandre Vincent, Green Bond Manager at Agence France Trésor. Thank you for being with us. And clearly, Caroline Harrison and Leah Mooting, who did the research in the first place. Thank you all, and see you next time.